So in this video, we're going to go over if Dubai is really 0% tax or how much tax is payable if living in the UAE and operating a UAE business or a UAE company. So if you're considering moving to Dubai, you've probably wondered, is it really 0% tax? So this video is going to explain it so you've got a bit more clarity over how the taxes are paid and what the actual tax rate is with some estimates. And you can obviously apply this to your business. Okay, so everything's going to be done in pounds just because it's a bit easier and we're comparing against UK taxes. So it will all make a lot more sense. When it comes to personal taxes, it's still 0%. This has not changed in the last 5 years that I've been here, and I don't think it's planning on changing soon. So personal taxes are still 0%. So that includes salary, dividends, income from property being rental income, or selling it for a profit, and capital gains referring to selling a business. Obviously, capital gains is a property too, but if you sell a company, you're also going to pay 0% capital gains whilst being here, depending on how it's set up. This isn't blanket financial advice, but it depends on how it's set up, okay? So providing you're a tax resident of the UAE, have a residency visa, and you've exited the UK tax system now. If you've not watched my previous video, go watch it, and it explains about exiting the UK tax system properly. You could move here, still be owing money to the UK government because you've not exited properly and you've not done things how they should be done, okay? In this video, it's going to be over running a UAE company and how that's taxed. So the first question will be, does your business do less than £600,000 a year in revenue? It's actually 615,000, but for this example, I'm saying 600,000. So if the answer to this question is yes, then you're going to be able to pay 0% in taxes. Now you'll pay a tax rate of 0% because of the small business relief. So as I've put here, under the UAE Small Business Relief Scheme within its federal corporate tax regime, if a company generates 3 million dirhams, which is 615,000 or less in revenue in a tax period, it qualifies for small business relief, which means it can pay 0% tax. And as you can see, small business relief on the FTA website, the Federal Tax Authority of United Arab Emirates, which says to revenue equal to or less than 3 million dirhams in both current and all previous tax periods. This is the relief to pay 0% tax. I'll put the link down below if you want to go check that out. This is from the government's website itself, okay? You will need to register for the 0% tax, and this applies to free zones. Just because it's called a free zone doesn't make it tax-free, okay? So if your business does more than £600,000 a year in revenue, 3 million dirhams or $816,000, here's how you're going to pay tax, okay? So you're still going to have a 0% personal income tax. That doesn't change. But you will get a 375,000 dirhams tax-free allowance. So the first 375,000 profits in the company would not be taxed. And this is roughly £75,000 or $100,000. It's like $102,000, okay? Profits are not taxed until you exceed this point, okay? So because the 9% tax is on the taxable profits, it doesn't actually give us a true representation of the effective rate. It just says the tax rate is 9%, but it's not really what it is payable, okay? If you did 1 million in revenue in pounds and made £70,000 in profit, you'd still pay 0% tax because of the £75,000 tax-free allowance. Okay, so let's look at an example based off £200,000 a year in profit, okay? This is going to be set up for dividends similar to the UK tax setup. So you make £200,000 a year in profit and you set up for dividends, okay? So you've done 1 million in revenue, 800k in expenses, so these are like ads, some staff, you've got, I don't know, flights, softwares, the general expenses, okay? You've not taken any money personally through the business. So you've got £200,000 in profit. You've got a tax-free allowance of £75,000. And you've got a taxable profit then of £125,000. So sure, the tax is 9%, but you're paying 9% on 125, not the 200, which means your tax is £11,250. So then you have the profits after tax, which is available for a distribution, a dividend, is £188,750, which means your effective tax rate is 5.62%. Whilst the taxes is 9%, the effective rate is not what's claimed. It is lower by a considerable amount because of this tax-free allowance, okay? You would then share £188,750 to yourself as a dividend at a rate of 0%. So here's how we minimize this to reduce the taxes even further, as if this wasn't low enough already. We're going to break this down on how this would be structured to achieve a lower tax rate. So when we break down the maths, like I say, it's not as claimed, and we're going to find ourselves able to take a salary. So £1 million in revenue, £800,000 in expenses gives us a business profit of £200,000. Now, versus the UK setup where you just take dividends, we're going to take a salary because there's no stipulation to taking a salary. There's no salary tax and there's no national insurance or contributions that a company would need to make like there is in the UK. You can just pay it and it's considered as an expense whilst going straight to you and having no tax as well. Similar to the £12,570 you take in the UK, same applies. So then your net profit is going to be £100,000, okay? Your tax-free allowance still counts. You still have £75,000 in tax-free allowance, which means your taxable profit is £25,000. So the tax payable is 9% of £25,000, meaning you pay £2,250 in profit. You then have dividends available of 97,750. So your effective tax rate, given this tax based off this, because it's pre-salary, would give you a tax rate of 1.125%, so 1.1% in tax. So you've then received personally salary of £100,000 done normally as a salary, and then a dividend of 97,750. Okay, your take home is then £197,750 taken to you personally, running it through the business, and out of that you've paid £2,250 in tax. It's 1.125%. Now you have to take a reasonable salary. I know what most people are going to be thinking, that you can just wipe the whole company and pay it all as a salary, and that's quite frankly not the case, because it has to be deemed as a reasonable salary. Okay, if you're a one-man band, you can take a higher percentage, but as the business and revenue grows, you can't take the same 50% salary as you would in this example. Okay, it would be, the amount would come down and you'd have to pay the tax and pay the dividend. As if this wasn't already low taxes, this is just how it's done. Okay, so now let's compare this to a UK tax setup. So again, 1 million in revenue, 800k in expenses, £200,000 in profit. You're going to be subject to 25% in corporate taxes. Now it is a smidge lower because the corporate tax in the UK goes from 19% to 25%, from 50k to 250, but I believe it's like 24%. So I've just rounded it to 25% to make this math easy. Now, these funds here, the profit after tax of £150,000 is what you'd be left with, are now available for dividends. Now, typically you'd leave the majority of these funds in the company, but that's because you don't want to be taxed at the higher rate for no reason. If you don't need the funds, you just leave them in the company. That's how it's done in the UK. Now, because the UAE doesn't tax dividends, we're going to compare this with taking all its dividends, because since it's now going to be available to you without any crazy taxes, you will then take that money. You would not leave it in the company. So here's how we take these funds as a dividend. So you have the dividend of £150,000. You would then take that personally and you pay a dividend tax of £42,548. You would then have a take home of £107,452, which means you've paid £50,000 in company tax, so this is corporate tax, and personal dividend tax. You've then paid £42,548, which means your total taxes paid are £92,548. And your take home is £107,451. Based on this math, your effective tax, the total tax divided by total profit, is 46.27%. So as we can see here, it's 92,548 and 46.27% in tax, versus Dubai's 1 to 6%. As you can see, I've done two examples just to give you an example of the taxes, but the low rate is £2,250, which is a total tax saving of £90,298. So now let's look at an example if the revenue was the same, but the profits were a lot higher. Let's say you're not a e-com business anymore, you're an agency, and your margin's not 20%, it's 50%, okay? So you've got £500,000 a year in profit, okay? Same revenue, but the expenses are dropped and your profit is 500,000, okay? Here's how it's going to look on the UAE company. Cool. We've got £1 million a year in revenue at a 50% margin, so it's around £500,000 a year in profit. Here's how the numbers look, okay? So with the UAE free zone, you've got $1 million in revenue, profits $500,000, so 500,000. You then have a personal salary of 25%, which is £125,000. So your net profit after the salary is $375,000, but you still get the £75,000 tax-free allowance. So it's profits after that of which are taxed, which means the profits you'll pay tax on is £300,000. So you'll pay 9% on that 300, which is £27,000. So you now have funds available to you after tax to pay as dividends of £348,000. Now here's how the funds are taken personally. So you took a salary of £125,000 and dividends of £348,000, which means you've taken personally £473,000 and you've paid in taxes £27,000, which gives you an effective tax rate of 5.4%. Now, like I said before, your salary can't be 100% of the income, because as you get bigger and you have more employees and if there's more shareholders and so on, this needs to be reasonable, but this is a reasonable salary, 25%, and the effective tax rate is 5.4%, okay? Now let's compare this to the UK. So we've got the same profit in the UK, but you've got corporation tax of 25% on all of the profit, which means you're paying £125,000 in tax, which your profit after tax available for dividends is £375,000. Let's say you were to pay this as a dividend, you then pay in dividend tax £131.86, which means your take home based on £500,000 in profit is a take home of £243,914, which means the total taxes paid are £256,086, giving you an effective tax rate of 51.2%. So based off the whole £500,000, your total taxes payable is 51.2%. So you're giving away more than half of your income to taxes. And here's how it compares to the UAE setup. So as we see here, 5.4%. So the UK is 51.2%, and you're paying 256 and 86 pounds in taxes, versus Dubai or the UAE, where you'll pay 27,000 pounds in tax at a rate of 5.4%. So you're saving in taxes 229,086 pounds. So as you can see, this is a big difference to how you can reduce your taxes by legally moving to Dubai and relocating here. Now, to do this, you're going to need a company setup which can then sponsor you to become the employee of your own company and issuing a residency visa. Now, if you want help doing this, this is exactly what we'll do for you. So if you want to learn more about how this process will work, you can go down below, click to book a call, or send me a WhatsApp. Alternatively, you can find my Instagram right here. It's tom.watts. You can message me on Instagram and I'll be able to help you through this to see what your situation is when you're looking to move and sort of give you a step-by-step game plan to get this set up for you. So thank you for watching the video. If you've got any questions, just again, click down below or send me a message on Instagram. I look forward to answering those for you. So go down below and look forward to seeing you in the next video.